Hi, today we're speaking to David Hamiton of SunGard, and we're going to speak a little bit about core banking systems. So, looking at core banking systems, what are some of the key drivers for banks replacing those systems today?
Well, I think the financial crisis redefined many parts of the banking landscape. One of the most visible outcomes of the crisis was a dramatic decline on ROE performance for many banks around the world. And as banks look to restore ROE performance, many of them are focused really around four key initiatives. The first one is strategic cost management. The second one is building a more robust customer management framework, if you like. The third one is introducing risk-adjusted profitability into the organization. And lastly, the implementation of enterprise risk management. Those things are really designed to help a bank restore its ROE performance back to certainly not pre-crisis levels, but to a level far more acceptable and more sustainable to the organization.
What are banks really looking to achieve through core bank systems renovation?
The biggest priority for a bank right now is making sure that its core banking system and the renovation activities it's undertaking around its core banking system support the bank's renewed emphasis on its balance sheet. And when we talk about that emphasis, we really need, and we are seeing banks focus on three clear things. The first one is making sure that the core banking system supports their need to create an optimized balance sheet profile. Secondly, to implement and develop a strategic balance sheet framework. And what we mean by that is most organizations up until now have really focused on risk management as a response to compliance. As a result of the crisis, many banks see the need for risk managers and risk management to become closer allies in the strategic planning and execution of strategy into the bank. So building that framework in such a way that it's not constraining the bank's ability to respond only to compliance needs, but its ability to respond to the underlying execution of the bank's strategy is really important. And lastly, what we talk about is the need for the bank to be able to operationalize its balance sheet strategy and its balance sheet learnings. And a big part of that is bridging the language divide, if you like, between the risk managers and the retail bankers. When the risk managers often talk about embedded options risk, and the retail bankers will have a different nomenclature around that risk. They'll talk about mortgage prepayment risk or deposit early redemption risk. And it's important that as the risk managers lay out their balance sheet strategy, that strategy can be implemented in a very seamless and very cohesive way down through the operational and transactional systems of the bank. So helping bridge that language divide and helping the retail bankers understand what needs to get done and enabling them and giving them the systems that enable them to effectively and rapidly execute those strategies in a timely manner is something that's going to be really critical to core systems renovation.
How can technology be used to really address some of those challenges that you spoke about?
So core banking, we think the days of the big bang core system replacement are almost over. We will see isolated examples of that around the world, particularly in the emerging economies. More importantly, though, is a transition away from big bang replacement into modular, progressive transformation. So from a technology standpoint, it's important that the core banking system enables the bank to progressively change out components and modules of its legacy applications environment in support of its strategy and against a set of priorities that the bank has. So having a service-oriented architecture, being able to deploy components and modules that coexist with the bank's legacy environment are two really important things. And thirdly, not necessarily linked to technology itself, the software architecture and the technology architecture, but is the need for the core banking system to provide a pricing model that follows the architectural and deployment model. So a pricing model that can progress as the bank's use of the system progresses, like the architecture and like the deployment model would.